After a remarkable first quarter, the stock market cooled off slightly in the second, but investors still saw substantial gains. Strong earnings helped take Wall Street's collective mind off a decidedly mixed bag of economic signals. Consumers remained confident as the quarter unfolded, although hiring, inflation, and consumer spending weakened. Home sales declined, then rebounded. Overseas, factory activity in China and the Eurozone showed improvement, and foreign equity benchmarks continued climbing. Many commodities took sizable losses, but when the quarter ended, the bulls were still firmly in charge. When one quarter ends, the Bureau of Economic Analysis commonly makes its third and last assessment of the prior quarter's economic growth. In the last week of June, the BEA announced a final first quarter growth number of 1.4%, which was nothing to celebrate. Will the second quarter growth come in above 2%? The reported consumer spending data from the Department of Commerce raised some concerns about reaching that percentage of growth. While April and May brought solid growth for personal incomes, the gain in personal spending fell in April and May. Retail sales, too, tailed off after rising in April. Households did feel good about the state of economy as well as their financial prospects. In June, the Consumer Sentiment Index was up. The Federal Reserve lifted the federal funds rate by another quarter point in June, for the third time this year. It also disclosed it would begin reducing its massive bond portfolio this year, which could put pressure on long-term interest rates. Emmanuel Macron's decisive victory in France's national election cheered investors concerned about the potential for another crack in the European Union, and it started a rally in the euro, which continued in June after the European Central Bank President Mario Draghi commented that the threat of deflation is gone and reflationary forces are at play. Investors took these words as a strong hint that the ECB would presently end its quantitative easing. As the quarter concluded, Chancellor Angela Merkel's re-election seemed probable in Germany. A fourth Merkel's term would be another boost to the EU's economic confidence and stability. Oil traded under $50 for most of the second quarter, touching a low of $42 before rising to finish at $46. Home buying slumped in April and then rebounded during May. This rally was helped by cheap mortgages. The 30-year fixed rate average was just under 4% at the end of June. Taking a look at where the key U.S. indices ended the second quarter, the S&P 500 gained 2.6%, the Dow was up 3.3%, and the NASDAQ climbed 3.9%. With the three major U.S. equity indices up between 15 and 27% in the last 12 months, investors are naturally skeptical about how long stocks can maintain such powerful momentum. Bulls still rule the street, though, and bullish analysts see more upside to this market during the rest of 2017. In recent stock market history, when the bulls have been ruling the street in the first half of the year, they have tended to keep running for the rest of the year. Bears might say that the bulls who embrace these statistics are suffering from recency bias, and perhaps that argument has merit. Then again, bearish analysts have predicted an end to this bull market year after year, and still it persists. As always, we appreciate the trust you have placed in your LifePlan Wealth Management team. If you should have any questions, please contact your relationship manager. Enjoy the rest of your summer, everyone.